Hello everyone, I hope that you are doing well. Welcome to this new video in which I'm going to break down live how I made nearly $7,000 in just 2 hours time. Here you can see my live and futures account in which you can see the total P&L that was made for the day of the 30th of May 2024. Notice that I was able to short the exact high of both the morning as the afternoon session. You are going to see me do this live in front of you, and I'm going to record a voiceover explaining my internal thought process. Let's begin with today's video. Here we are on the 1 minute chart of NasDaq, and as you can see, I'm opening up my short position right now for NasDaq. I'm anticipating a swing high to form to then distribute towards the downside. I went short the moment that I saw the market show signs of a high formation above the 830, its respective high. Buy-side liquidity was resting above this high, and we took that out during our new macro window, our macro being from 8:45 to 9:15 a.m. I then saw this BC get overrun, and this was another shorting opportunity, an opportunity to pyramid and therefore increase the position size. In my mind, all I know is the following. I know that the buy-side liquidity has been reached. I know that we have reached the potential level where a smart money reversal could occur from or could originate from. At the right time, we have SMT. So during our time of interest, we reached a point of interest, and now I'm looking to see whether or not the signs will become present that confirm to me that a high will form. Notice that I'm also going to make use of time cycles within my breakdown to not only anticipate where reversals are going to form, but also where the market is likely to draw towards. What I want you to see is that the market opened up at 8:30 a.m. with the news release and immediately had this very big upclose candle. This candle is manipulation because we had news at 8:30. This candle manipulates above the previous cycle its respective high, the high of 7 to 8:30 a.m. Above that high, buy-side liquidity was resting, and therefore everyone that tries to buy this on a breakout will try to chase this. And where do they place their stop losses? Below the lows that formed prior to 8:30. And that's why I'm anticipating the market to reverse and go lower. I only care about what masters are doing because of the following. I do the opposite of them. When the masters are looking to go long, I look to go short. When the masters are looking to buy, I look for sells. And the reason why that is important is because that is basically how we can view these markets and how we can gain an edge over these markets, because the majority of people do the wrong thing because they don't know when and where the market is going to turn around. And the way that I'm looking at these markets allows me to see it in advance. And that's what I'm showcasing to you right now, where you see me short the exact high and the market begins to roll over. But what's very important to note is that I am not a financial advisor. Everything that I will share during this live voiceover is meant for educational purposes only. I'm not telling you to go out there and invest. I'm not going to tell you to go out there and trade. All I'm sharing with you is my own experience and my own opinion. You have seen a risk disclaimer during this video, and it's very important to note this. Now investigate how the market will react of this CB that just got created. Notice that we see a form of the market structure shift pattern, where we see an imbalance that formed at 8:30 a.m. Market retraced into that imbalance, formed a low, and we now displaced through that low with a CB. You might also have wondered, why did I take a partial? The reason why I took a partial is due to the following. I want to take partials at levels where I anticipate the market to either retrace or basically reverse from. When I know where these levels are and at what times they get reached, I can anticipate potential short-term lows to form. Because I'm trading on a live futures account with personal capital, I need to account for fees. I need to take care of the fees that my broker charges me with, and therefore it's always good to take a partial rather early on at a logical level, because it allows me to cover all of those fees so that the remainder of the position is full profit, or full potential profit, I should say. Notice that thus far the order flow is clearly bearish. The premium rates are functioning as resistance on price, and that's exactly what we're looking for when we're anticipating lower prices. Now, so far, you have probably been listening to me speak, and it probably already went way above your head. And that's not an issue, because I've been there. I've been there in your shoes. I've been listening to guys that were way more experienced than me for a while now. And when I heard them speak initially, to me it sounded like Spanish. To me, it sounded like, damn, this different language that I just couldn't understand. But over time, whilst listening more and more to them, it made sense to me what they were pointing at. And what you can see right here is exactly a showcase of what I've been teaching you on my public YouTube channel. Time cycles and price cycles in action. Surely, it will take a lot of work for you to see what I've been hinting at. However, it's literally in front of your eyes. You just need to put in the work. And what you can see right here is that we're utilizing the 90-minute cycles to provide us with the insight on where the market is at relative to the current range. And because we traded above that 7 to 830 range, which formed inside that red box, we know that everyone would try to chase that. Every single retail minded trader will go out there and try to buy that. We know that this is of course the engineering of sell-side liquidity, and therefore I am targeting the sell-side liquidity engineered below key lows. I'm monitoring to see how the market will trade below the 830 open. The reason why the 830 open is important to me is because it's not only the open of the second AM cycle, it's also the news candle. News candles being very important. I'm taking a partial here because I anticipate the retracement to potentially take place. Intermarket relationship signaled this to me. At this point in time, I'm very comfortable in the trade because my stop is already in a profit, and I can simply just observe and see whether or not IBDA is continuously going to be aligned with me. Notice how the arrow that I've drawn is being followed perfectly thus far. I'm recording this in hindsight, so it means I'm giving you a voiceover over my live trade. And that doesn't mean that this recording is less valuable or something, because as you can see, this execution was done on a AMP futures account, AMP being a US regulated broker, which is of course a real account, a real personal account, not some prop firm account, not some demo account. No, this is my own money that I'm risking right here, and this is what you're seeing within this execution. Notice that the market is open. You can see that on the bottom right, and you can see the candle sprinting, and this is not replay tool. It's very important, and that's also why I'm so keen on the no financial advice disclaimers, because I understand that I do not want to be at risk when creating content. The goal for me is to simply share my own opinions about the markets and my own opinions about time and price, because I am of the opinion that there are algorithms in control that control these markets and that are in fact manipulating these markets every single day. And that's the belief that allows me to be so precise with my entries, with the recognition of turning points in advance, like you can see me do right here. At this point, we can see the market retrace, and it's retracing into the range that has just been established from the high that formed at 845 to the low. Notice that I took a perfect partial in close proximity to the low that set up the retracement leg. At this point, my eye is drawn to the following. I'm monitoring to see whether or not the market will find resistance inside of that down close candle that I just annotated. If it will continuously find resistance in that down close candle, I anticipate that we're going to see a sell-off towards the low of the 5:30 to 7 a.m. cycle. The reason why I'm anticipating a sell-off to then occur is because I know and understand that we are in a deep premium relative to the current day range. So the whole day, retail-minded traders have been making money by going long. Where do they place their stop losses? below the old lows. So we understand that sell-side liquidity has been engineered and that can be attacked at a later point in time. And that is my idea. Notice that the 9:30 opening is right here. And I'm monitoring to see how we are going to deliver from there. We saw a very explosive 9:30 opening, which led me to believe that we might even see the London lows get delivered later down the day. At this moment, I'm actively monitoring to see how the market is delivering after the 9:30 opening. I want to see signs become present that confirm to me that it's likely going to roll over soon. I do not want to see any displacement to the upside occur. If any displacement towards the upside would occur, I understand that I likely need to get out of the position because then order flow would shift bullish. But right now, notice the reaction of the open of that candle with the long wick. Perfect reaction, and there we see this aggressive sell-off. I'm monitoring to see whether or not we're going to see speed towards the target, and that's where I'm going to take the next partial. Here I just partialed, and I'm monitoring to see whether or not we're going to see speed and velocity towards the downside continue. If it's not going to continue, but we instead retrace deep, then I want to get out of the position, because I understand that if it's going to retrace deeper, then I allow it to retrace. Then I understand that we're likely going to either reverse towards the upside or consolidate. And neither of those scenarios is, of course, favorable for my short opportunity. Notice that the market is delivering lower beautifully below the previous cycle low, and this is by itself already a valid trade setup from the range high all the way towards the range low or towards the previous cycle low. Beautiful setup, and it was a rather nice quick run. Notice how we made use of the 9:30 volatility to justify this move of taking place. Here we are at the 1 minute chart of NasDaq again. Now we're watching it during the afternoon session. As you can see, this is exactly the same delivery profile as during the morning session, where the first cycle, its respective high and low, are visible on the chart, annotated by the blue box. If you would skip back to the beginning of this video, you would see the first AM cycle, which was of course at consolidation range, followed by a manipulation towards the upside, followed by distribution towards the downside. I'm anticipating the same to occur during the afternoon session because I have a bearish bias established. Right now you can see me gouge order flow. Gouging order flow is something I do to basically determine whether or not we're bullish or bearish. And here you can see me go short inside of a bearish breaker, inside of two CBs that formed inside of that bearish breaker on the 15-second chart. Notice that I went short before the breaker was even confirmed, so to say. It's a term many ICT traders like to use, but you need to understand that the, so to say, displacement below a breaker is already basically visible before the displacement even occurs, because you need to understand that there are multiple things that occur after one another that confirm to us that the reversal is in. And in this case, you see those very clear equal highs get purged, followed by the signs that confirm bearish institutional order flow. Next to that, what is very important to note is the fact that we had SMT with ES relative to the AM high. And when we have SMT with ES relative to the AM high, and we're in the afternoon session, I anticipate that to be a sign of manipulation if we're anticipating lower prices to take place. Right now, I'm short with 3 contracts, and I will look the pyramid inside of this CB right here, as you can see me do. Putting the execution arrows on so that you can see where I opened up my positions. At this point, I'm monitoring to see whether or not NasDaq will manage to stay inside of the CB and roll over. I want to see big downgo candles towards the downside come soon. Look, I do not want to see the market displace above that CB again. Why not? Because it already traded below the bearish breaker. And because it traded below the bearish breaker, that big down close candle, which is annotated by the red box, I'm anticipating big down close candles to come soon. However, I need to wait for the time to be right for the market to be allowed to expand. And that's how I'm simply waiting for time and price to align. And when they align, I can anticipate speed and velocity to take place. You need to look at it as the following. You need to look at it as, okay, at this time, this will occur in price. It's not at this price, this will occur in time. No, it's always time that comes first and then it's price. Notice as well, by the way, that we are again seeing the high form during the manipulation cycle of the overall PM session or of the overall AM session as we saw prior. This is very important and crucial information because it shows to us that we're indeed likely going to form a swing high before continuing lower. At this point, I'm simply waiting. Notice that my stop was in very close proximity to the price, but it never got reached. I'm simply waiting to see whether or not the market is allowed to expand lower. At this moment, I'm becoming more confident in the fact that we're likely going to see that expansion leg lower take place. Why? Because we displaced outside of that period in which time distortion took place, in which the market simply went sideways and booked time. Price did nothing of significance whilst time was booking. I'm monitoring to see whether or not we're going to see big down close candles occur soon. Notice that this BC on the left side of the curve should function as an inverse value gap on price. If I was not short yet, this would be a pyramid. I was monitoring to see whether or not we would retrace into that CB. And if we would, I would have pyramided as well. However, we did not see the retracement, so I was content with the amount of contracts that I already had on. If I was trying to push it, if I was trying to, I don't know, just get crazy results, then I would of course have pyramided there because every single retracement that takes place is a potential opportunity to pyramid. As long as the draw liquidity is correct, pyramiding is something that we can do. Here I partialed below some sell-side liquidity and monitoring to see whether or not we're going to see that continuation lower occur soon. At this point, I'm looking for every single upclose candle to function as resistance on price because the order flow is clearly bearish. I'm monitoring to see whether or not we're going to draw towards the targets mentioned. How we treat those targets, those specific price levels, is very crucial for me to determine what's likely going to happen next. Where retail-minded traders don't know when and where their support and resistance ideas work, I know exactly where I'm looking for so-called support and resistance theories to work, because I know at what time I'm looking for very specific levels that get reached. And as I outlined during my appearance on the Words of Wisdom podcast, the 1:45 p.m. to 2:15 p.m. is of course the time window during the afternoon session in which I'm interested in looking for very specific things. Did you see the size of that candle? The repricing that just took place? That is a candle in which I want to take big partials because I understand that such a candle can take place because of the following. When IPDA wants to reprice aggressively within a short period of time to then either reverse or consolidate. And in this case, the latter took place, where we saw a very ugly sense of time distortion take place. And time distortion is by far one of the most annoying things to be in if your targets have not been met yet. But in this case, the targets have of course been met. So for me, it didn't really matter. I was just chilling, just relaxing outside of the markets, and the trade was just running. But that's the thing. When you're in front of the charts and you see time distortion taking place, I would highly suggest you to walk away. And time distortion is likely going to take place the moment that PD arrays are not functioning in the way that you would anticipate them to function relative to where the market is currently at. I believe that if you would investigate what I already shared during this video, I think that you will already elevate your level of understanding IPTA significantly, because you need to understand that the same things repeat every single week, every single day at the same times. What you need to understand is that these cycles, these delivery profiles, so to say, these delivery cycles occur every single day, and they occur during the same time cycles. However, our job is to recognize when this is likely to take place, and the when is the answer. You need to understand when the time is right for the market to be allowed to expand. And that's something you learn through experience, but you also learn it by paying close attention to detail. Because at the end of the day, you need to understand that there are footprints hidden in the delivery of price. And our job is to recognize them consistently so that we know when the time is right for the market to begin to allow to expand. You need to understand that we often say, look, it occurs at the same time. This doesn't mean that the reversal always occurs at, for example, let's say 140. There will be instances in which the reversal occurs at, let's say, 138 or 145 or 150, whatever. But you need to understand that all of that can be anticipated based on the delivery around those time windows. And when we see the delivery around those time windows, we can wait for the signs that confirm to us that, for example, the formation of a high is in, and then we can anticipate the delivery to take place. Think about it logically. If the reversals would take place every single day at the same time, then eventually people will begin to recognize it. And when people would begin to recognize it, it would get spread, and then eventually the information itself would likely not be of use anymore, because then the market would have to be changed when it comes to when it's allowed to deliver. But once you're able to go out there and see your model consistently play out every single week, that right there gives you a level of confidence that doesn't come close to anything else out there, because you know exactly what you're looking for. And that's something that a lot of traders do not know. They simply go out there and they push some buttons and they think, why isn't this working? Why am I not able to go out there and consistently get something from the market? It's because they don't understand why and when the market is allowed to move. Because when you understand those two things, you need to learn to control yourself. And learning to control yourself is a whole different topic for another day. However, it is something that you need to be able to indulge in. That process of learning how time and price move the markets and how you can eventually control yourself. With that, this lecture comes to an end. I hope that you found it insightful. Please let me know in the comments if you want to see more of this type of content in which you get to watch over my shoulder. I wish you all the best moving forward and I look forward to speaking to you soon. Be safe.